Do you believe if the outage is a couple days long or longer, will there be an impact on the equity market side of things?
Morning, Brian. Yeah, there will be actually a more positive impact, you would think, because when you get rising gasoline prices, people call this word reflation, right? And that's, I think, what fueled last night a little bit the equity rally, the small rally that is, because the tip over into the energy market was seen there as well. And well, as you noted too, like, look, there's going to be some outages, and it's going to affect the pump prices, so it will impact maybe local economies, but by and large, it should not really impact the U.S. economy overall. We're dealing already with higher gas prices because the economy is open and everybody is mobile right now, so there's another relationship there. I think overall that although this is a significant event in terms of the hack itself and all the circumstances on it, it did have a positive spillover effect to equity markets.
Yeah, I mean, you go back a couple of years and the Colonial had about a 10-day outage on a lot of its system, not all of its system. A reminder, it's not just one pipe. If our audience does not understand what it is, it's a giant tree. You've got a couple of trunks and then a bunch of branches that go off. When that happened about 3 or 4 years ago, the price of gasoline rose about 30 cents. It's not nothing, but it's not everything. We've already got a consumer, Ben, that to your point on inflation is being pretty much punched in the gut everywhere they look with higher prices. Sounds like you're not that concerned this will ultimately slam the consumer.
I think it won't, because on the one hand, you have an economy that's already really in a strengthening path that you are. So yes, it bites, of course, in consumer spending, higher gas prices, but there's so much pent-up savings currently, meaning there's so much on the sidelines at the moment with people having their bank accounts, and spending and income are actually back to pre-COVID levels because of all the stimulus we put in. So I think to that extent, the potential blow, if you will, from this event may be cushioned by all those savings. Also, no doubt, though, Brian, that if you get this sort of inflationary effect from these gas prices, that the inflation-linked bond market will react to this. Right? Real yields will actually decline a bit. And I think this is another reason why markets are up, because the dollar has been a little bit weaker, I think on the back of, again, lower real interest rates in the United States, a result of higher gas prices filtering through to inflation reports in the future. So that, too, gives a lift to global markets because weaker dollar is a supporting reason for emerging markets, for example. So I think if you take it all together, it's not a good event, obviously. It shouldn't have happened. I think if they do manage the outage, then it will be normalized. Consumption itself is so strong at the moment that they can, I think, cope with these high gas prices at the moment.
Well, right now, Refinitiv, a data provider, saying that there are 6 oil tankers being loaded, or at least have been booked to potentially load gasoline from Europe, ostensibly destined for the United States. I mean, I can't remember the last time we saw gasoline come in by truck or ship. Maybe it was Superstorm Sandy a number of years ago. But Ben, back to stocks. The energy sector, of the 11 S&P sectors, energy is up 41% this year. 13% more than the next best group. It is unloved. It is underowned. In fact, it is widely hated. I know it's a tiny part of the market, but it's been hot. This is ostensibly, I hate to say it, bullish for oil and gas stocks, because it kind of comes back to the idea of domestic security, infrastructure, more build out. Is there any way energy can lead the market, or is it simply too small to do any good overall?
Well, it could lead the market, not only just in the United States, but globally, because as you point out, like, we actually are still below levels from where we came from the trough last year. That was so significant. We're still making back there. So energy has been indeed the supporting factor, not just in the United States, but also in Europe for the broader rally. So yes, there is more to go. And although that sector is smaller than technology or industrials, it just adds to that, because the industrial sector, too, has been, quote unquote, hot, right, because of all the demand that's out there for anything when it comes to materials or anything else. So I think the energy sector is just like in 2016, 17, you get this reflationary push in the markets. We're still in that push. And I think that's what energy does at the moment. It's really supporting for markets.
Shepard Smith here. Thanks for watching CNBC on YouTube.